Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs in the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hi, everybody. Welcome again to another live episode of Wall Street Unspun Midweek Market Update. I'm Peter Schiff, host of the show, president of Euro Pacific Capital, author of Crash Proof 2.0, How to Profit from the Economic Collapse, and currently the Republican candidate for the office of United States Senate in the state of Connecticut. You know, tomorrow I'm heading up to Hartford. I have a couple of local television shows. I'm going to be recording a Face the State program, which I think airs on a Sunday. Another one that I'm doing, and interviews with some of the people from the Hartford Current. So the campaign is starting to kick into a higher gear. I have a very, very full schedule now of political meetings going in the month of November. You know, there's elections coming up next week, the 2009 elections. And once those elections are over, then I think the electorate will be fully focused on 2010, and we will be fully engaged at the Schiff for Senate campaign. If you haven't yet donated to help me in this campaign, please do so at shiftforsenate.com. Also, I understand there is a money bomb. SchiffSuperbomb.com is a website that is orchestrating a money bomb, I think for November 5th. I'll take a look on their website and SchiffSuperbomb.com to confirm the date of that money bomb. Hopefully we can raise quite a bit of money on the money bomb. Yep, November 5th at Schiff Superbomb. But you donate on my website at shiftforsenate.com. I know that website right now is showing a little over $1.1 million raised. We need to raise a lot more money. I need to kick these fundraising efforts into a higher gear over the next couple of months. I believe I was the number one money raiser in this race in Connecticut. For the last quarter. I think I raised more than any of the other opponents in the race. That's great. Congratulations to everybody who helped make that possible, and my thanks for the people who donated in the last quarter. Hopefully we can keep up the pace. The people that donated last quarter, if you didn't max out, and as most people probably did not donate the maximum amount, that you continue to make these donations so that we can continue to repeat this performance in the months ahead. In fact, exceed it. We're going to need to raise more money. In fact, I'd like to be the single biggest money raiser, and maybe that'll draw a lot of attention to my campaign and what we're doing. But also as important as raising money, we have to effectively utilize that money, and one of the ways we're going to do that is with people volunteering to help with the campaign. And I say this, you know, and I'm in the process of launching a brand new Schiff for Senate website. It should be up and running hopefully within the next week. The new site will be there, so make sure to keep visiting it. I think you'll find the new site much improved. Ultimately, too, we're going to be filling it up with more of the issues that are there. But the most important thing is to donate. I mean, not to donate, but to volunteer your time. That is going to be key. Even if you don't have the money to make a small contribution, your time could be more valuable. I need as many people as I can who believe in what I'm doing, who believe in the principles that I'm trying to bring back to Washington and bring back to this country, to dedicate some of their time to helping me get into the Senate. And if you go to the Schiff for Senate site, you can join Team Schiff to take back America, become a member of the team. You can volunteer. And all the people that volunteer, and a lot of people have already done so, but I am going to be contacting the volunteers via email with instructions, with assignments, if you will, things that they can do to immediately impact this race. And we are working on building out that platform now where volunteers all around the country, using their own personal computers and their own telephones, will be able to do something that no other candidate, I think, has ever been able to do. And I think it's publicity and work that few candidates could even buy, because you can't buy that kind of support. You can't buy. I'm hoping to enlist 10 to 20,000 volunteers who will give me an hour of their time every day. Nobody can afford that kind of support. And I don't think any other candidate would be able to get anywhere near the number of volunteers, because what I am talking about is a real movement, something that people can really believe in, something that people can really fight for, because it's not about me, right? The campaign and the race is not about me. It's about what we believe in. It's about the issues that we stand for. It's about our founding fathers. It's about the Constitution. It's about the character of this country. It's about sound money and all the things that we need to bring back to Washington. And if I'm the person that can help bring it back, that's great. But it's not about me. It's about something much bigger than me, and that's why I think people will volunteer. They're not volunteering for me, the man. They're volunteering for the things and the principles that I stand for and that I believe in, because those are the principles that made this country great, and those are the only principles that are going to keep it great. And so if you feel that way and you want to help me, go and volunteer, and then more than volunteer, make sure you follow through with the things that we're going to do. And we're going to try to make it fun. There's going to be all sorts of ways that people who are working on this are going to get immediate feedback. We'll have contests and all sorts of things to keep it interesting, to keep it fun. But we have an objective. We have a goal, and that's to put me in the U.S. Senate. And people are talking about what kind of legislation, what do you want to, what are the bills that you want to write? I don't want to write any bills. I want to tear up the bills. I mean, the only new legislation I want to write is repealing the existing legislation, which, so I think I can be very effective, because I think I'm going to introduce all sorts of bills to repeal rules and regulations that are already screwing this country up. The key is going to be to get other senators and congressmen to vote for that, to get them to understand that they've spent their careers destroying this country, that our only salvation is to undo all the damage that they've done. And the good news is it's not impossible. And the free market is very dynamic and very self-healing. We can get out from under this. We could dig our way out of this hole. But first we have to stop digging it deeper. And that's what I've got to do. I've got to get to the Senate before it's too late and try to make a difference. I certainly haven't made a difference at all in the private sector. I've made a difference in the lives of certain individuals, and I certainly think I've educated a lot of private citizens. I think a lot of people around the world understand economics a lot better because I've been helping to teach it. But I don't think anybody in Washington has paid any attention to what I've said. Hopefully, if I'm standing on the Senate floor filibustering everything they're trying to do, they're going to have to listen to me. Anyway, I'm taking your calls live. The number is 888-678-9597, 888-678-9597. Well, let's talk a little bit now about what's going on in the markets, in Congress. We've had a pretty big sell-off in the stock market just these last few days. I've been commenting about the weakness in the market on my video blogs. I think I've done one video blog each day for the past 3 days. So remember, if you want to keep up to date with my thoughts and my takes on the market between these weekly radio shows, make sure to go to the YouTube site that I have and look at my video blogs, where I talk about what's going on. But we've had a lot of weakness. The Dow was down about 119 points today. We closed at 97.62. Back below 10,000 after having traded above it late last week. In fact, since Friday morning, right, the NASDAQ has dropped 150 points. That's about 7% since Friday morning. This is Wednesday. That's a pretty big drop. Also today we saw a very, very big drop in the commodity currencies. The Australian and New Zealand dollars were down big, down over 2%. The Japanese yen surged over 1%. We had weakness in gold stocks and gold. Deja vu of 2008, where the only thing that went up was the dollar and U.S. Treasuries and the yen, and everything else went down. And I think that trade was very much on today in the last couple of days. The question is this a bigger move? Are we going to do a retake of 2008? Is the market going to get crushed for new lows? Is the dollar going to go on a huge rally? Well, anything is possible, right? I mean, we certainly can't rule anything out from being within the realm of possibility. I think that the odds at this point would say that that is not going to happen. I just don't see a major rally in the dollar. I just don't see that coming. Is it possible? Sure. I mean, I didn't think we'd have a huge rally in the dollar in 2008, but it happened anyway. So I could be wrong again. But I just don't think so. I still think that in 2008, when the markets were falling apart, there was still the fear that the government might actually do the right thing. There was the fear that a lot of banks were going to go under. There was the fear that we were going to deleverage and all this, the house of cards was going to come tumbling down. But I don't think anybody is afraid of that anymore because the government has already showed its hand. The government is going to bail everybody out. The government is going to prop everybody up. We all know that. The government's not going to let these big banks fail. The government's not going to let real estate collapse. The government's not going to let the economy deleverage. They don't want any of that. They don't want to deal with the short-term consequences. They're all convinced that the only way to save the economy is to keep stimulating it, and they're going to do that. And I think if we start to get a bigger decline, then it's more money printing, more stimulus, and all of that is going to hurt the dollar. Remember, if you can think of it kind of like as a seesaw, anything the government does to reflate the bubble economy, right? Anything they do to try to prop up home prices, to try to keep Americans spending money, to stimulate the economy, anything that they do to cause that to go up causes the dollar to go down, just like it's the other end of the seesaw. And whatever they would do to defend the dollar, if they tighten up on credit, if they contract money supply, if they raise interest rates, the dollar will start to rise, but at the other end of the seesaw, real estate prices are going to fall. Stock prices are going to fall. More companies are going to fail. More banks are going to fail. And so I think the government has already picked their poison. And it's inflation, and they're going to keep creating it. And so in that environment, I don't see that you're going to have a significant dollar rally like the dollar rally we had in 2008. I mean, the decision that the government has made is that they're not going to let investors lose a lot of dollars. They're not going to let people who made foolish loans lose their money. Well, the only way they can do that is to keep dollars abundant. If they allow loans to default and institutions to fail, then dollars are scarce. People lose them. But if they're going to make it so that people don't lose their dollars, well, the only way they can accomplish that is by having the dollar lose its purchasing power. That's the only way that these losses that the form of the losses can be changed. Because remember, the government can't make losses go away. They can only pretend to make them go away. So there's two ways that we could lose, right? We can lose our money, or our money could lose its value. Those are the two ways. And the government has chosen the latter because the government wants to pretend that because we all get our dollars back, that we all got our money back. But we don't. We just get pieces of paper back. We're not going to get our purchasing power back. But I also think that based on what happened in 2008, there's still a lot of people that still don't understand the real dynamics in the U.S. economy. And so they're very fearful of a repeat of 2008. And I think that has provided a wall of worry. I think this entire move up in the stock markets around the world and here in the U.S. has come against that wall of worry because people are worried about a repeat of 2008. And while it's possible, and if it is a repeat, again, I don't think it changes anything. I'm still going to have the same long-term approach to investing. Maybe I could say, gee, I had an opportunity to take a lot of profits, go to cash, and get back in. But I still think, given all the information I have today, that is not the approach to take. I think that there is more risk in that. I think that there is more long-term risk to being in dollars and having the bottom drop out of the dollar than in being in stocks and having the stocks have to go through another correction. So that's my take on that. I do think, though, given what's happened, prices for our stocks were going up very fast, day after day, week after week. This is the first, I think, kind of meaningful correction we've had in a while in some of the stocks that we've been buying. And more than viewing it as a negative, again, whenever I see a weakness in the stocks that I want to buy, I look at it as an opportunity. It's an opportunity for new clients to get better prices. It's an opportunity for existing clients to get better prices on new money they send in. It's an opportunity for clients to have better terms when they reinvest their dividends. Remember, the vast majority of the stocks that we're buying for our clients pay high dividends. And most of the clients who are earning these dividends are leaving them in their accounts to reinvest. And it's better to reinvest when stocks are falling than when they're rising. Especially if you're a long-term horizon, you're a long-term time horizon. And of course, we're only investing money for people with a long-term time horizon. If you don't have a long-term time horizon, you shouldn't be investing in stocks, period, either abroad or in the United States, because at any moment in time, stocks can go down. And if you happen to need your money and stocks are down, well, then you're going to take a loss. What you want to make sure is that you can sell your stocks on your timing, right? So that you can pick the time when you want to sell. If you have a short-term time horizon, you don't have that luxury. You have to sell, regardless of where the market happens to be. You never want to be in that position. If the price that you're able to get is low, you want to be able to not sell. You want to be able to sell if the price is high relative to what you think the company is worth, relative to its earnings, relative to its dividends. And you have that luxury if you have a long time horizon, because now you choose, if you want to sell your stocks. But again, if you have a short time horizon, you've got to stay liquid. You've got to stay in things that have a lower volatility, than stocks. Now you can also, look at other currencies. I've said to people, if you really want to be in cash, I think the Japanese yen makes the most sense of the major currencies, given the way it seems to trade relative to assets and relative to the dollar. Even though, as an American, theoretically, you are taking currency risk when you own the yen as opposed to the dollar. I think it's an infinitely safer position to be in. Yes, there might be some more downside in the short run. Maybe the yen could drop 10%, or who knows, and you could take a hit. But if the dollar completely collapses, at least you've got your money in another currency, and it's not in the U.S. dollar. And I talk about this complete collapse. One of these days, I think it's going to happen, because it's going to be the consequence of the monetary and fiscal policy we're pursuing. Every day that we go to sleep here in America, Asians are waking up in the morning, and one of these days they're going to wake up in the morning and they're going to realize what fools they've been, and they're not going to buy our debt anymore. They're not going to buy any dollars anymore. And then when we wake up, it's going to be to a whole new world. And the key is to make sure that that individually, we don't have to wake up to that nightmare. Also, what's going on in Congress, today, apparently they are going to be extending, I guess, the credit, the $8,000 credit for people to buy homes they can't afford. Well, that was a brilliant government idea. When the housing bubble burst and prices started to fall, the politicians figured, well, how can we stop this from happening? Well, let's give people money to buy houses. Because the private sector didn't want to do that anymore, because they learned their lesson. And since the government never learns a lesson, the minute the private sector realized that this was not a good thing to do, the government said, great, we'll do it. And so the government is providing people with money so that they can buy houses virtually without down payments, and providing them cheap subsidized rates with which to finance houses that they really can't afford. But now they've decided to up the ante in stupidity. And so now it's not just people who haven't bought houses in 3 years. So these are people who are renting, right? So the $8,000 credit is to encourage somebody who is renting to go out and buy a house, right? Now the new credit is going to apply to people who already own houses who want to trade up to more expensive houses. Now, what is the social justification for that subsidy, right? Somebody owns a house, and we want to give them money to buy a nicer house, to buy a newer house, a better house, a more expensive house. Why? They already own a house. It doesn't make any sense. Yes, if somebody wants a nicer house and they can afford one, great. But let's not give people money to go out and buy a house that they wouldn't have bought. I mean, what's wrong with what they're already living in a house? This is all unnecessary transactions. This is the government, playing into the politics of the real estate market. This is all about the home builders. It's about the realtors and the whole housing industry that benefits from all these increased transactions. And the bottom line is it doesn't even benefit the buyer, because what happens is, because of all these subsidies, home prices are much higher than they otherwise would have been, which means the people who are utilizing these tax credits to buy homes are paying a lot more for the homes than they would have paid absent the tax credits. In fact, I think that the price decline would be a lot greater than $8,000 on the typical home if the government wasn't providing these credits, which means the people who are buying houses are worse off because of the credit. They would get a better deal without the credit. The real benefits of the tax credit goes to the seller of the home, goes to the real estate developer who has built the home. But, why is the government giving a subsidy to somebody who wants to sell their house? I mean, why should somebody selling a house get a subsidy over somebody who's selling anything else? And, of course, why should the government theoretically subsidize the purchase of houses? What about the purchases of other items that people make or don't make? And why should renters have to be taxed to subsidize home buyers? I mean, why should we tax a renter so that somebody who owns a house can buy a more expensive house when the person paying for the whole thing doesn't even have his first house? He's still renting. He's got to pay so that somebody could trade up to a bigger house. This whole thing is crazy. But there is no sanity in Congress. It's just one stupid thing after another. It's what can we do to interfere in the economy? Remember, the main reason that the realtors are saying that we need to extend this tax credit, they're all telling the government that if we don't have this tax credit, home sales are going to plunge. Well, if that's true, then that means that people are buying houses that they wouldn't be buying absent the government subsidy, which means the government is causing people to make decisions that they wouldn't make in a free market. Well, that is the problem. That is why the country is so screwed up, because we have not allowed market forces to efficiently allocate resources and restrain risk-taking. Instead, we've had government central planners coming in and unilaterally determining what interest rates should be, what types of activities that we want to encourage, and what types of activities that we want to discourage. And that doesn't work. That creates all sorts of problems and all sorts of distortions that end up having to be resolved in very painful ways that we call recessions. It's government policy that makes recessions necessary. But, of course, without the recessions, the mistakes just get worse and worse and worse. And that is the problem. The government doesn't like the recession because the recession is trying to cure the problems the government caused. But the government doesn't want them cured. It wants to keep causing more and more and more. So they keep coming up with these subsidies, the cash for clunkers and the tax credits. If an $8,000 tax credit to buy a house is a good thing, why not an $80,000 tax credit? Let's let people really buy houses. I mean, it's nonsense, right? If $8,000 is good, then $80,000 is better. Now, the reason that $80,000 is no good is because $8,000 isn't any good. None of it is any good. The government has to stop this. They have to stop interfering in the markets, and they have to let them function. We have to look at all the ways, as a society, we've interfered with market forces to distort the economy, to create malinvestments, to create bubbles. And we have to go about repealing those things. That's what our congressmen should be doing, not debating over whether or not we should extend the tax credit to buy homes, but we need people saying that we never should have had a tax credit to buy homes in the first place. People should buy homes without government interference, without government money. And, of course, if the government was a lot smaller, which is what I want to bring about, I want to shrink government, well, people probably would buy more homes because they'd have a lot more money. Or if they didn't buy homes, they'd do something else. But we need to make government smaller, not keep getting government bigger and then trying to micromanage everybody. I mean, sure, if we didn't have this enormous government, a lot of people wouldn't need tax credits to buy homes. They could buy them. That's the irony of the thing. Anyway, I also wanted to talk, a little bit about, and I mentioned this in my video blog today, but I thought it was a very good comment, so I thought I'd talk about it again. This idea that when you have inflation, it doesn't necessarily mean that all prices are going to rise simultaneously or equally. I mentioned on my video blog that I thought rents were going to come down. And I think that's going to happen, despite the fact that inflation is going to go up. Now, rents are a big part of the CPI. So for a while, rising inflation will kind of be masked by the fact that rents represent, I think, 40%. Rents and owner's equivalent rent represent 40% of the CPI. But I think that other prices will be going up much more rapidly to offset the gains that tenants might have from the fact that they're able to pay less rent. But I think one of the reasons that a lot of tenants are going to be paying less rent is because they're going to be taking on roommates. So they're going to be paying less rent, but they're going to be getting less house or less apartment. They're going to be giving up some privacy. But in addition to paying less rent, their housing costs might actually go up when you figure out what their utility bills are going to be, how much more it's going to cost to heat the house or air condition the house, or how much more it's going to cost them to put food in the refrigerator, or how much more it's going to cost them to drive to work, or how much more expensive their insurance policies might be, or how much more expensive health care is going to get, or taxes are going to rise. There's all sorts of things that are going to go up that are more going to offset the fact that rents are going to come down, because they have to come down. I mean, there's such a glut of property, so many people are going to be losing their jobs that landlords are going to have no choice. But one of the things landlords will be able to do, they'll be able to cut back on their services. They won't be, let's say you live in an apartment and the landlord can't really raise the rents. In fact, he's cutting the rents. Well, maybe he has a swimming pool for the apartment. Well, maybe he'll decide to just drain the pool and cover it up because he really can't afford to operate it. Or maybe there was nice gardens, he won't upkeep them. Or maybe if the building the paint is starting to chip around, he's not going to fix it. I mean, our whole standard of living is going to start coming down. So the quality of our housing is going to deteriorate, even if the cost of renting comes down, because the economy is a disaster, which it is. But eventually, of course, if the inflation turns into hyperinflation, which is what will probably happen if we don't come to our senses soon, eventually rents will go up, but only in terms of a depreciating dollar. Real rents will plunge. Under hyperinflation, rents will collapse in real terms, even though they're going up, because basically what will happen is rents will become a much, much smaller percentage of people's budgets. I mean, maybe right now the average person, maybe he spends 30% of his income on rents, let's say. Well, in hyperinflation, that might go down to 5% or 10%, of your budget going to rent, because food, which maybe right now food is 10% of your budget, well, maybe in hyperinflation, food becomes 30% of your budget or 40% of your budget, and energy becomes 10% of your budget. And so this stuff blows out of whack. And one of the reasons, of course, is things like food and energy. There's a global market for that stuff, right? We've got to compete with people all around the world who want to buy it. And so just because our economy is weak and we're getting poor, if other people are getting rich, you don't have to compete. If you want to rent an apartment, in Toledo, Ohio, you're only competing with the people who live in Toledo, Ohio. That's the only people who would rent it. You don't have to worry about somebody in Japan or China renting that apartment. Your landlord can't decide, hey, look at how much higher the Japanese yen is. I can get a high rent if I can get some from Japan. That doesn't happen, but it happens with energy. It happens with food. It happens with clothing. It happens with consumer electronics. It happens with a lot of products that are internationally tradable. So those prices go way up. And, of course, real estate, it's here, right? If there's an apartment, it already exists. And if nobody's there to rent it out, then you have to slash prices. But, other products aren't here until they're made. They have to produce them. And if, and the production will just stop. Companies aren't going to be producing things if they can't sell them at a profit. And so prices will have less supply or prices will rise. But there already is real estate. Now, of course, what will happen in the real estate market is there will be no new construction. Once people figure out this dynamic, then all new construction is going to come to an end. And we won't be building houses for a long time. We won't be building commercial structures for a long time either, which, of course, is certainly going to mean a lot of unemployment for people who, up until now, were working in the housing industry or all sorts of industries that are related to housing. Anyway, I see that I've been talking for a long time. Let me go to the phones quickly. Let me find my caller list here. Hold on. First call is Bob in Pennsylvania.
Hi, Peter.
Hey, Bob. How are you?
How are you? I really appreciate what you're doing, and I really enjoyed Crash Proof. Read it twice. I learned a lot. I appreciate you writing it.
Thank you.
My question is, why would anybody consider any fiat currency, whether it be the yen or the Norwegian kroner or anything, versus physical gold or physical silver in a hyperinflation scenario? I mean, if I'm living in America and I buy foreign stocks and I need money to pay bills and I try to get that money, it's still paper. But if I have silver dollars or silver coins or gold coins, I'm going to make out tremendous. Just as in Zimbabwe, they have to pay for bread through chips of gold that they dig down at the river, and the old people starve because they don't have the strength.
Yeah, well, look, I advise people to have physical gold and silver in their possession for just such an emergency. I don't tell people to only own foreign currencies or foreign stocks, but by the same token, I'm not telling people to put 100% of their money in gold because we might have hyperinflation. But also, if you happen to live in Zimbabwe and you have foreign stocks and you're getting dividends in euros and in yen, you can also spend those. I mean, so there's purchasing power there. So I certainly believe that, if people have euros and the euro still has value, that you'll be able to, exchange goods and services in the United States for euros as easily as you might be able to exchange them for a silver coin.
But I mean, could there be issues with the banks closing and run on the banks, and you can't get to your money in a hyperinflation scenario?
Yes, I don't disagree. That's why I advise people to own physical gold and silver in their house. I'm starting a new company, Euro Pacific Precious Metals. We're in the process of doing that. I am going to be selling the coins that the Perth Mint makes, not just to have them stored at the Perth Mint, but I'm going to actually have them shipped to my clients' homes so that they can have a certain emergency supply of gold and silver. So in case something like that happens, that they're prepared. But it's not a certainty that is going to happen, and I don't think it's prudent for me to tell somebody to put 100% of their life savings into silver and gold coins and keep them in their basement.
Well, what would happen then? I mean, in the worst case scenario, if you had stocks in American banks, I mean, if the hyperinflation went to where we think it's going to go, any paper you own would be wiped out, right? Correct?
No, because stocks represent ownerships of companies, of physical assets. So if you own stock in a company and there's hyperinflation, that company is still there. Their plants, their equipment, their buildings, their trademarks, their goodwill, whatever they own on their corporate balance sheet, you still own. In fact, if your company has some debt and the debt is in the currency that is hyperinflated away, as will actually benefit because your debts are repudiated immediately and all the assets of the company are transferred from the creditors to the shareholders. So stockholders can actually benefit from hyperinflation, although an economy will suffer dramatically. So that's certainly not a good thing to happen to an economy. And some companies might not be able to survive if all their customers are broke. So it depends on what companies you own.
Well, that's my last question. I would be more interested in the mining stocks, and my fear about the mining stocks is the cost of energy, and that fact that oil could completely hurt the shale price moving forward.
Yeah, well, it depends. I mean, if there's hyperinflation, I believe that gold prices will rise much faster than energy prices, and so profit margins will be maintained with respect to energy. But anyway, let me let you hop. I got some more callers, and I know we only have like less than a half hour. Next up is Sean in Massachusetts. Go ahead, Sean.
Hey, Peter. Thanks for taking my call.
Sure. Thanks for calling.
I've donated to your campaign, and I'm going to donate again on the 5th. And I was just quickly wondering if how one might go about trying to get on board your campaign in a paid position, because I've been building a political career, but I have about a year free time before my next run, and I'd love to work for you because I'm up here in Massachusetts.
Yeah, well, we've hired, I think I got about 4 or 5 people, maybe 6 people that I'm paying now. It depends if you send us a resume and, just, so we can take a look at what you can do for us and,
what's the best contact?
Whether or not, well, I know that I've been having problems with my email maybe send one to Schiff at schiffforsenate.com.
Okay.
Schiff, that's my brother's email address when he does some volunteering. So Schiff at schiffforsenate.com, and we can forward it to the appropriate a person to review the resume. Certainly sign up to volunteer. I mean, if you can do some work, volunteer basis, fantastic. And maybe we can use another paid person. We'll see.
Great, and I just had one quick question. In one of your recent video blogs, you were talking about how Australia and New Zealand are commodity currencies. So are they actually backed in a different way than other currencies?
No. We just refer to them as commodity currencies because their economies are heavily dominated by industries that are commodity focused. So in countries like Canada and Australia, you have a lot of mining, you have a big energy, you have a lot of agriculture. So a lot of their GDP is comprised of industries that are involved in the commodity space. Therefore, as commodity prices rise, that impacts their terms of trade. So if commodity prices are high, then Australia earns more for its exports, and it helps their economy. And so that's why, we talk about the currencies that are most favorably impacted by rising commodity prices. Now, the countries where it would be a negative would be countries that are heavy importers of these things, that don't have a lot of natural resources, that import them, and therefore they would not be the beneficiaries of rising commodity prices, like a country like Japan that imports pretty much all of its raw materials and natural resources.
Peter, I'll see you on November 7th in Boston.
Okay, great.
All right, take care.
Next up is Gary in Michigan.
Hey, Peter.
Hi.
Hello?
Yeah, I think what he was referring to, I think I'm speaking up at Harvard University in Boston on that weekend. So if anybody's around, I'm not sure if it's open to the public, but I am going to be speaking at Harvard on, I think, a week from Saturday. Anyway, go ahead.
Hey, Peter.
Hi.
Hey, word on the street is you have a George Washington pinata. I'm a little disappointed in that.
Oh, you happen to catch that appearance on Fast Money. Yeah, that was just the intro, because they know that I'm negative the dollar, so they think that I'm secretly, I've got my voodoo doll of George Washington, and I have a pinata, and I beat up the dollar. It's kind of funny, because I pointed out, look, I'm not the one beating up the dollar. Ben Bernanke's beating it up. President Obama's beating it up, and he's beating up anybody who holds dollars. So, I don't want to get beaten up. That's why I don't own the dollar. But if it was up to me, I would be pursuing policies that were favorable to the dollar. But right now, it's not up to me.
Hey, I have a quick question about my Europac account.
Yeah.
I've heard both you and Andrew talk about keeping your foreign dividends in native currencies.
It's possible. I mean, we don't recommend it right now because it kind of complicates the account. But if the dollar really starts to free fall, then that's an option that you have. Is we can leave your dividends in the currencies in which they're earned. It's better if you do it in an IRA or a tax deferred account, because when you do it in a taxable account, it creates a lot of extra transactions, a lot of extra paperwork for you.
Okay, that's my broker had said it was kind of difficult, but I've heard both you and Andrew mention it, so I wonder.
It's easy to do. It's just more difficult for you to keep track of it when it comes to calculating your taxes every year, because every time you buy and sell a currency, that's another transaction.
Okay. Well, listen, if you're going to a Halloween party this weekend, goes Bernanke.
That's too scary. All right, thanks for the call. Next up is Sam from Michigan.
Hey, Peter. Thanks for taking my call. Just have a couple quick questions for you. Number one, you do advertise on your website something about the Canadian Oil Trust, I believe, and I also understand that I believe the Canadian government they're taxing it at a higher rate now, or there's something going on with that. I just wanted to know if there's if that's a downside risk as far as less dividends, and also too I noticed that some of these trusts have cut or even eliminated their dividends. I wanted you to get your thoughts on those.
Yeah, well, there have been some of the trusts that have decided, based on changes in or prospective changes in Canadian tax law, to kind of reinvent themselves out of that trust model, and have suspended dividends, pursuing more of a growth strategy. And that's happened. I mean, that's happened in some of the trusts. And some of the trusts, of course, have had to cut their dividends simply because they're in businesses. Let's say they're in natural gas, and the price of natural gas has come down. Well, I mean, they don't earn as much money, so they can't pay out as much money. So that's happened. But, I think by and large, I still like the sector. I think it's a good way to get exposure to various resources, and they pay, even with the reduced dividends, the dividends are still very, very high. The stocks are among the highest yielding assets out there. So we include them in our portfolios. I mean, they're not a huge weighting. I mean, maybe a typical portfolio might have 5 to 10% of their stocks in these Canadian type trusts. But I mean, I still think that there's a lot of merit to owning them, and I'm hopeful that maybe there will be some changes, made in the tax law before they actually come into effect.
Okay. Also, too, as far as you're talking about dividend payouts in yuan and other currencies by owning foreign stocks. Now, it looks like it looks like these foreign governments are pretty much trying to pursue similar policies as far as keeping their currencies weak. I mean, what's the upside of holding these if they're, let's say, the one's pegged to the dollar, for example? Are you just anticipating that they'll depeg it?
Well, one of these days, it's like holding a beach ball under the water. I mean, you can only hold it there for so long. Eventually, you take your hand away, and it comes, floating to the surface, or it shoots above the surface. And all these currencies have been suppressed for some time, and at some point, I believe that they're going to rise. I think countries around the world are damaging their own economies, and in the long run, damaging the American economy by artificially propping up our currency. And it's going to come to an end. I mean, nothing that is, this is going to go on forever. The internet stock prices didn't go up forever. The price of condos in Miami or Las Vegas didn't go up forever. The world's not going to be propping up the dollar forever. They're not going to continue to throw good money after bad. Because unfortunately, the more money the world loans us, the deeper into debt we're going to get, which means the bigger the problem is. The world is basically hanging them, they're hanging themselves with their own rope. And what they need to do is stop doing that.
Okay. And also, too, I was thinking about opening up an account with you guys, but I really don't have that much to spare. I'm talking like $5, $10,000, maybe 15. Are there any other investment options besides that mutual fund you have, or is that pretty much?
Well, you sound like a young guy, and so, yeah, our China fund is ideal for people who are younger, who want to have some exposure to what I think is probably the most dynamic economy out there, the country that probably offers us the most promise over the long term, and we can get you a lot of exposure to the Chinese market. So I think that would be a way to go, with us, for somebody who's young and aggressive and looking for a good place to park some money and let it grow over 5 or 10 years or longer. I think that the fund would be good. But anyway, you should talk to a broker. Get a prospectus. The fund, it's a mutual fund. It's sold by prospectus, so you want to read it, understand the risks and the rewards, and decide if it's something that you want to pursue.
Okay. All right. Well, I appreciate your time today.
Thanks. Sure. Thanks for the call. Looking forward to having you on board as a client.
My pleasure. Bye.
Okay. Next up, Brad in Washington. Hey, Brad. Brad, you're on the air. Is Brad there? Okay, let's forget about Brad. What about Don in New York?
Hey, Peter, how you doing? It's actually John in New York, and not that that matters. But I have two questions. First one is regarding real estate. So I own a primary residence down in New York. I own a vacation home that was going to be a rental up in upstate New York, Monticello, about 2 hours outside of the city, and I was going to be renovating that home up in upstate New York by utilizing some of the home equity in my house down on Long Island. And what had happened was we took some money out on the home down here, and we used that money to avoid paying the PMI during the purchase, so that money wouldn't go to waste, obviously not being tax deductible. But the long and the short of it is we actually had money in cash that we used to pay that home equity loan down. From the $50,000 that we borrowed, we paid it down to about $20,000 that we owed, that we still owe. And once we did that, the bank in question, which happens to be one of the bailed out banks, shut down our home equity line, saying that the value on our house down here was at risk of not being fully realized. So unfortunately, the money that we had in cash that we used to pay down so as to avoid paying, interest, and we figured we would draw on it as needed, that money is now no longer there.
That's a risk you take, I guess, when you pay down a line, that they don't keep the line open for you to pull the money back out. I mean, basically, you made the mistake. You had that money and you put it back into a property that's basically probably in a negative equity position. So you improved the bank's balance sheet, but you hurt your own, because now, if you walked away from the property, that would be an extra money that you would lose. Although I think that home equity loans in general are recourse loans anyway. So if you didn't pay the bank back the money, they would have had the right to go after your other assets.
Yeah, I mean, and I'm not necessarily in a negative equity situation, because we did look through another bank to see about refinancing, and home values in my area, my house is basically valued at, according to this recent bank, it was $486 in a declining market, and we only owe $415 with the current balance. So But
yeah,
maybe
the
what they
thing
said
is, though,
was,
I'm very suspicious about what appraisers say homes are worth, because it's one thing to say this is what your house is worth. It's another thing to actually sell it and get that price, because what happens is they base the value on what the last house sold for, but they don't base it on what the last 100 houses didn't sell for, because there could be 100 houses on the market and one of them sells, and they say, okay, your house is, worth what that one is. But what about all the 99 that didn't sell because there's not enough buyers? I mean, so
yeah.
I think it's you can win the lot. You can sell your house as like kind of winning the lottery. You can get that one person to give you what everybody thinks the houses are worth. But at some point, all those houses that are just for sale that no one's buying, what price is it going to take to move those? That's going to be the key to determining what these houses are worth.
So ultimately, my question is, with having this house that right now, for all intents and purposes, we either have to save up money to accrue and renovate at this point. It's probably going to take roughly around $40,000, which would take me about a year to scrape together, or potentially sell the property upstate at a loss and cut my risk. And I'm wondering, with the impending collapse of the dollar, as I've been following along with you for quite some time, how that would affect my decision. So do I walk away and just take my $50,000 loss from the money out of the home
I don't
equity
know.
line?
It's hard. I don't know enough about the circumstances, and there's probably not enough time for me to educate myself enough without boring the hell out of everybody else who's listening to us. But, in general, look, if you can, I think that real estate is going to be difficult. I mean, if outside of owning your principal residence for convenience sake or other sentimental reasons or things like that, real estate as an investment, I don't think is going to give out good returns, at least not in the United States. I don't think commercial real estate will do well. I don't think, apartments or multifamily will do well. I think if there's hyperinflation, yes, it will probably do better than bonds, but you're still, in absolute terms, I don't think you're going to be better off. I think you're better off getting your money out of the country, getting your money out of the dollar. That's the unfortunate reality. That's the unfortunate consequence of the policies that we're choosing to implement in this country.
All right, so then
Anyway,
that brings me to my second question, which would be, I have right now, my wife and I have probably about $40,000 in cash and liquid assets that we keep as an emergency fund. So that $40,000 would cover our bills, for both houses, living the way that we're living now, if both of us lose our jobs for about 6 months, which is unlikely in the industries that we're in. So how do I take that emergency fund and put it to work for me?
You really can't. I mean, if you want to have it as an emergency fund, you need to keep it for emergencies. But you might consider whether you want to keep it in gold bullion, like an ETF, or do you want to keep some of it in the Japanese yen. That way, it's still liquid. It still might go down, but it probably won't collapse. And you can take a percentage of the emergency fund. So let's say you break up your emergency fund between dollars, yen, and gold, and then there is an emergency. If the dollar happens to be strong, then spend your dollars. If the yen happens to be strong, then spend your yen, or find a way to tip into the pool that's got the highest water level.
And is that one? Is that something
and
one
at
of your
least that way,
brokers
and that way, at least if there's we can help you buy gold, but gold, or we can help you with some of the. You can buy there's a mutual fund we buy. You can talk to us about that. Just invests in Asian currencies, which I think is a good substitute for liquidity. It's going to be there's some volatility there, but I think you have to have a mix between, okay, I need this money for an emergency, but if the dollar collapses before the emergency, I want to have some protection. Because if we have hyperinflation and all your emergency money is in dollars, you're not going to be able to fund the emergency because the dollar's not going to have any value.
Yeah, I understand.
So you have to have a balance, in my opinion. Anyway, thanks a lot for the call, John. Next up is another New Yorker. I think it's Joe calling from New York.
Yes. Hello?
Hey, Joe. How are you?
Good, thanks. How are you?
Good.
I just have a couple quick questions. First of all, I was wondering if it would be smart of me to have the cash portion of my portfolio in Canadian currency.
Well, I think it's better than U.S. dollars. Yeah, I mean, I think that you don't want to be in U.S. currency, but it just depends on how long the cash is going to sit there and what the purpose is.
It's just in the event that the U.S. currency is worthless, I would have something that I could maybe spend.
Yeah, well, you can keep a basket of currencies. You don't have to just have the Canadian dollar. You can have a basket of currencies that would include the Canadian dollar, or But I think if you're going to have all your money in one currency, I think you're going to be better off with Canadian dollars than U.S. dollars.
Okay. And one other thing I wanted to ask was, how I have a single property and I have a double. How would, if there is hyperinflation, how are the property taxes going to be affected? Are they going to skyrocket, or am I going to be able to keep up with them?
I don't know. I mean, obviously they're going to have to raise taxes, because inflation is going to make all the government expenditures higher. But I think again it's going to diminish the value of all property in the United States, because hyperinflation is going to bankrupt a number of Americans, and those Americans that are being bankrupted are your tenants or your potential tenants. And if your tenants are broke, they can't pay you rent. And if you have nobody to rent the property to, what's it worth? So it's going to be a very difficult a situation. Anyway, thanks for the call. I know we're kind of only got 10 minutes left.
Okay,
I got 3 calls on hold, so let's not take any new callers, and I'll try to get through these last 3 callers. Next up is Tom in Oregon.
Hi, Peter. I have a question about IRAs and taxes. Given that income taxes likely will rise in the near future to help pay off the massive federal government debt, I'm wondering how important it is to begin transferring funds out of traditional IRAs and into Roth IRAs in the next few years.
I don't know. I mean, I've always been of the opinion that if you can put off paying the tax, put it off, because you never know. I mean, some people say, look, pay the tax now because it'll likely be higher in the future. But I don't know. I mean, it's a tough call to make. I don't think we're going to be raising taxes to pay off the debt. We're not going to pay off our debt. I mean, we're going to default on our debt. The government might be raising taxes because, it thinks it's going to raise revenue. But I don't think so. I think we're going to reach the point of diminishing returns when it comes to taxation in this country, particularly if they raise taxes on the upper income people, if they raise taxes on entrepreneurs, on risk takers, on employers. We're just going to get less risk taking, fewer entrepreneurs, fewer employers. We're going to drive the best and brightest into retirement or out of the country, and the government's actually going to collect less taxes despite raising tax rates. And when that really starts to happen, it's a death spiral for the economy, unfortunately. Mm-hmm. All right, thanks for the call.
Thank you.
Next up is Doug in Texas. Go ahead, Doug.
Yes, hello, Peter. Thanks for taking my call.
Thanks for calling.
Listen, I've got a question. If as the dollar drops and our items like food with the animals and grain, fruits become much, much cheaper for people outside the U.S. and they come shopping, a lot of the stuff is going to leave on a one-way trip out of here.
Oh, so absolutely.
We'll be left with the second quality, the poorer animals, the not a desirable stuff.
Absolutely. I mean, that is what is going to happen. I mean, when somebody is fishing for lobster in Maine, someone's going to be there from Asia or someplace else, right at the docks, paying more than we can, and they're going to just put them on ice and ship them out of the country. And if you want that lobster, you're going to have to compete with somebody in Japan who wants it just as bad and who has a lot more money to pay for it. And we're going to be exporting all the best. I mean, it's going to be very expensive. I mean, we import already. We import 90% of our seafood right now. So if you want seafood, chances are it came from another country. And so we have to bring it over here. And if we have cheaper dollars, but yes, the stuff that we grow ourselves, farmers have a choice. I can sell in America or I can sell in Europe. I can sell in Asia. Now, we've got an advantage in that if a farmer sells it to us, his transportation costs are a little bit lower. But once we get by that, if the dollar really takes a hit, the transportation costs become minimal, and they can make more money selling abroad. And that's what's going to happen. And it's going to be, look, I've talked about this. It's going to be a reversal. Right now what happens is all the stuff comes in and paper comes out. The world sends us all sorts of commodities and all sorts of merchandise, and we send them our paper. Well, the reverse is going to be our paper comes back and the stuff goes out. And it's not just going to be the best cuts of beef or the best lobster. It's going to be everything. I mean, the average American maybe has 2 cars right now, right? Well, what's going to happen over the next decade or two is a lot of Americans are going to sell their surplus car to the Chinese. That's where a lot of the cars that the Chinese are going to be driving in the next decade are going to come from. They're going to come from used cars purchased here in America because the Americans just couldn't afford them anymore. There was things that they needed more than a second car, like food, like heating oil. And so these things are going to happen. Our thing is to ratchet down. It's going to be like a giant repossession of all these goods that we bought on credit that we really couldn't afford.
Well, what I was wondering is if the farmers, they'll be quite pleased to see they're getting a good price, they're getting a good currency or whatever to.
Well, remember, they're not
items.
necessarily getting. Remember, they're not necessarily getting a good price. They're getting more dollars, but the dollars have diminished in value. That's going to be the problem. You know, that people keep saying that, yeah, a weak dollar helps our exports. Yes, it's like putting your exports on sale. You sell more products because you cut your price. But are you really getting more value because you cut your price? I mean, we'd rather sell for full price. But yeah, I think that farmers, for example, will be in better shape than a lot of other occupations. Like if you just happen to have a local convenience store where your customers are all American, you're screwed. At least if you're a farmer where your customers are all over the world, your business is going to be much better. Which is why if you're going to be in business in this country, you need to be in an export-focused business. And I do personally have some investments in U.S. companies, but they're all the export-related companies, like agriculture, like oil and gas, like mining. That's where my money is.
Well, what I was wondering is, do you think that the government might step in and force the farmers to sell to them instead of selling to the foreigners themselves to control?
Maybe. I mean, look, yeah, we could have export controls. We could have limits on exports and things like that. Sure thing. I mean, all this kind of stuff will happen in the chaos that the government is in the process of creating. Anyway, thanks for your call, Doug. Last up is Roger in Oregon.
Hi, Peter. I'm a Europac client. I just wanted to get your opinion on a recent event. South Korean National Oil Company purchased of Harvest Energy last week. They paid a huge premium for a company that has a lot of debt and a refinery that needs $2 billion worth of work. I just thought it was significant that they would pay so much for a company. I think to me it seems like the energy price wars have come to the North American shores with that, just because
I don't even know how good a price is. We'll see. I mean, I'm a shareholder in Harvest, and I just assume I like to see somebody else coming off for more. I mean, sure, it's a premium, but to a very depressed price. I mean, Harvest did trade as low as about $3 back in March, and so now it's a little over $9, so it's tripled from the March low. But if you go back from September 05 to July 07, the stock was around $30. So it basically dropped about 90% during the market carnage of 2008. It's now up 300% from the lows, but it's still down about two-thirds from the price that it averaged for a couple of years. So, I like to see some more bidders come in. Who knows what might happen? But I do think this is going to happen for more and more of these energy-type resources. And these Asian companies, they're coming in. They're scooping up companies in Canada. They're scooping up companies in Australia. They obviously prefer resources to dollars. And from their perspective, it doesn't matter what they pay as long as they get rid. Now, this is obviously a Canadian dollar purchase, but what they're probably going to do is take their U.S. dollars they don't want, use them to buy Canadian dollars, and then use those to buy Harvest. But if they don't spend these dollars, they're going to be worthless. They know that. So basically, price is no object as far as I'm concerned. Sure, they'll try to buy as cheap as they can, but no matter what they pay, as far as they're concerned, they're getting a good deal because they got rid of dollars that have no intrinsic value and might eventually have no marketable value, and they accumulated a real asset.
Yeah, and I
All right,
agree.
hey, that's the music. That means we're out of time. Thanks for the call. Thanks, everybody, again, for listening and tuning in. This has been Peter Schiff at Wall Street Unspun. Remember to call up Euro Pacific Capital, 800-727-7922, 800-727-7922. Visit our website, Europac.net. Pick up a copy of Crash Proof 2.0 and go to the shiftforsenate.com. Make a contribution. Sign up to volunteer to help me take back America. That's it for everybody. I'll be back again next week for another live episode of Wall Street Unspun.